to take an economic decision. So economic decision is nothing but whether to have to invest in this company or whether I have to lend this company, whether I can supply the raw material to this company. All these informations will be depend upon our financial statement. That means whether it may be profit and loss account or the balance sheet, because from those statements only they can analyze of the company financial position and the performance. So through an P&L account we know the position of our company. So whether the company is earning a profit or the losses, whether the company's assets and liabilities are the equal, whether they make an economic growth. So every economic decisions will be depend upon the what are the informations available from at the point of our decisions. So when you are making a decisions, so we take a consideration. So what are the informations we are available at the present? So on those information you have to take a decision. So for example, you are taking a bank. So if the bank want to lend a loan for you, so that will see your previous financial performance. So whether this company has earning a profit, whether this company is economically developed, so whether the company may have a good financial position, whether the company has paid the previous loan payment regularly on the in time or the due timely amount of payment ಮಾಡಿದೆ. So on the basis of that, so we make a decision. So these are all the information we'll come to know from the financial statement. So as an auditing works, they will going to make a check whether the financial statement, whether providing a true and fair view. So whether all the transaction which are recorded in our financial statements, whether it is in a balance sheet or P&L account. So those transactions, what are the profit, what is the sales, or the assets are showing the current figure. So on those figures, they can make a decisions as a means of overcoming the problems of unreliable information. That means some company will going to provide the unreliable information which are not happening in the organization. Then the decision makers must develop the method of assuring him that the information is sufficiently reliable for these decisions. So in doing this, he must weigh the cost of obtaining more reliable information against the expected benefits. So if the company, if the investor want to invest in our company, he has to know whether this company has the capacity to pay the dividend on time. So a commonly way to obtain such a reliable information to have some type of verification. So that verification will be called as an auditing. Okay, so performed by an independent persons. The checking and verification of our book of accounts should be done by an independent person. So it should not be have any link with the company. Then the audited information is then used in the decision making process on the assumption that it is reasonably complete, accurate, and unbiased. So on the verification data, we can make a decision that so these information are unbiased. That means they are not misrepresent. They not have any fraudulent activities. So then move on to the origin of the evaluation of auditing, how the auditing has been evolved. So first, as we are aware that the term audit is derived from the Latin word adire. So the word auditing will be derived from the Latin word adire, which means to hear. So in the ancient time, they are going to hear from the bookkeepers. So what all the transaction has been happened. So what is their current financial position? What is the profit? How many purchases have they made? So many credit purchases have they made? How much sales they have made? How much cash sales? How much credit sales? What are the loans of that company? So these are the auditors will going to hear from the bookkeepers. The bookkeepers were nothing but an accountants. Then they have to make an decisions. So what they are doing. So as in a it was in the use in ancient countries such as Mesopotamia, Green Egypt, and Romeo and UK in India. So in Vedas contain the reference of auditing. So you know that the father of the Arthashastra has been Kautilya. He's also given a detailed rules for accounting and auditing for the public funds. So you are obtaining the funds from the public. So for that, they are making a standards or the procedures how you have to use the public funds. Then so as we know that so main authority body for the International Standard Accounting Board or the Institute of Chartered Accountant of India, they are the prime institution which are making a standard or the procedure for making an accounts. So as you know that the auditing is a system of checking upon the persons who is the course of their work, handle the receipts and expenditure of money belong to the others. So we are making an expenditure means we are getting a fund from the public, we are making the what are the receipts from them and the what purpose we are spending that amount. Then So there is an historical evidence suggesting that household accounts of early rules were kept by the least of two persons independently one another to keep a check of mistake and misappropriations. So in Mauryan, Greek and Roman Empire, there was a foolproof system of control over the public revenue and expenditure. Then the origin of audit may be traced in the Middle Age, but the audit in the present sense can be traced after the math of large scale productions in the consequence of industrial revolution. So in the past senses they are using for the limited purpose auditing. So after the way of conducting the industrial revolution, they given the most importance for the auditing work. Then, so goods purchased for the hand-mouth levels have started to be mass production for reaping the economic scale of technologies. So as a result, this industrial resistance following the concept of practice to begin to evolve the appropriating funding of the business. So we know that the capital will be most important for every organization. Then managing the business by objectives rather than the scores of owning it. So that means, so if any business you are running, you have to make an objective. So rather than simply running a business, you make an objectives. For this purpose, I am running a business. So then it is more clear that the investors can know. So this business will going to deliver these kind of goods and services. They are running for this particular purpose. Then for the separation of class of investors as a one type of managers. So you have to know who are all the investors, whether the equity shareholders or investors, preference shareholders or the debenture holders, to make a appropriate return for them. Then early developments in India. So how the account has been developed in India anta bandaga. So in India, the law relating audit followed in a British model. So we know that. So every auditing work or the every constitution amendments or the procedure we have derived from the British constitution. So as per the Companies Act of 1857 made the provision for an optional audit for the companies. So in the year of 1857, as per the Companies Act, they make an optional, means they are not making any mandatory for the auditing activities. Then after the Companies Act of 1913, they make an the auditor should have been qualified as a chartered accountant. He should obtain the degree, and every company should make an auditing activities and compulsory and mandatory. So for the public company who are running in India, they are mandatorily should verify their books of accounts from the auditing report. First year M.Com class. Second. Then in the 1930, the accounting profession was brought under the control of central government to ensure the uniformity in the standard throughout the country. So we know that different country have maintaining a different gap of different accounting procedures. So then the central government make a procedure that so every country has to have a single standard. So that means if you are treating a cost accounting method or money measurement method, so every company or the every country has to maintain the same procedure for maintaining account. Then after the post independence, the accounting has developed from the in the 1949, the parliament enacted the Chartered Accountant Acts, so which has vested the management to control the accounting professional itself. That means the chartered accounting institutions will give the guidelines for the accountants, so who are making accountants who obtain the auditing activities and how to they make a bookkeeping records. Then the affairs of ICAA are managed and controlled by the council comprising elected a representative of chartered accountant and nominees of the central government. So the chartered accounting institutions will be the prime institution for making a procedure. For that, those persons will be monitored by the nominated persons who will be appointed by the central government. Then the Companies Act of 1956 has made an additional provision as regards to the maintenance of accounts and audit. So after that, so in the Act of 1956, they make a additional provisions. While we are making an auditing, you should provide an audit report. After the verification, the auditor must be given a report that whether the account should be having a fair and fair view provide Martha. Then in the Companies Act of 1956 also prescribed the cost audit in the case of specified companies to be conducted by the cost and work accountants. So every company are making an auditing. That means for the particular company, they make that cost and accounts has to be audited. So regularly they are auditing the financial statement and the profit and loss account. After the Act of 1956, they had a provision that the cost accounting should be also audited by the independent auditor. The Income Tax Act 1961 has made an audit of accounts for a certain assets compulsory, which further contributed for the growth of profession. So after the Income Tax Act 1961 made that so every company should make an auditing work, then it becomes in a profession. So let's move on to the definition. So as per the Spicer and Pegler, auditing is a such an examination of books of accounts and the vouchers of a business. So basically they are going to examine the books of accounts and the vouchers. Vouchers are nothing but the receipts or the invoice which are have the proof of the transaction which are occurring in the business. As we enable the auditors to satisfy himself if that the balance sheet is properly drawn up. So in the examination they will going to check whether the balance sheet has been properly prepared, then as to give the true and fair view to the state of affairs of the business. So that balance should has to show the true and fair view. That means if you have an assets of this amount, that has to be shown that amount only. They not mislead the value of the assets or the liabilities. Then that the profit and loss account gives the true and fair view in the profit and loss for the financial period. For example, we are auditing the financial statement for the particular 22 and the 23. That period, the profit and the losses should be shown correctly. So what the profit the company has earned, what the loss that company has incurred, that has to be clearly shown in that business. Then according to the best information and explanation given to him as shown by the books, if he not in the respect is not satisfied. So after the verification, if the information is obtained from the accountants and the books, if it is not satisfied, he can give a qualified report. That means the information which are recorded in the financial statement that are not true. So if it is satisfied, he can give the information or the report that the accounts are prepared on the basis of the procedure which were obtained. Next, what are all the features of auditing? So, auditing is a systematic and scientific examination of books of accounts of a business. So, basically, first features will be to making an examination. That means they have a systematic procedure. They also give the importance for the fundamental truth. That is what scientific examination. So, they have the procedure that. So, before they give a notice, they have a systematic manner. So, the asset should be in a proper manner, the liability should be in a proper manner. So that is the first feature. Second one, audit is undertaken by the independent persons or the body of persons who are duly qualified for the job. So auditing work that the verification should be done by an independent person. That means that persons do not have any relationship with the company. So it should be an outsider for the company. Then second feature, third features will be audit is a verification of the result shown by the profit and loss account and the state of affairs as shown in the balance sheet. So as we know that they are going to verify our balance sheet and the profit and loss account. Then audit is a critical review of the system of accounting and internal control. Then auditing is done with the help of vouchers, documents, information, explanation received from the authorities. So if I am or the verification the books of accounts of XYZ company. So we are going to know the documents and the information, the vouchers which are kept in that company. So on the basis of that documents, we are going to verify the books of accounts. Then auditing is done with the help of vouchers, documents and information. Then the auditor has to satisfy himself with the authenticity of the financial statements and the reports that have exhibit the true and fair view and the state of affairs of the company. The auditor should be have a satisfaction that the business has a true and fair view. That means the transaction is very true. They not have recorded any fraudulent activities. Then next features will be the auditor has to inspect, compare, check and review and scrutinize the vouchers supporting the transaction and examine the correspondence, minutes, books of shareholders, directors, memorandum of association and articles of association in order to establish the correctness of the books of account. As an auditor, you should have a compare and check the transaction with the vouchers. So if the voucher representing we have purchased a machine of 10,000, that transaction should be verified. That same account, the same machinery, whether they are recorded in their financial statement. Then let's move on to the objectives of auditing. So as we know, there are two main objectives of auditing, the primary objective and the secondary objectives. The first primary objectives will be as per the section 227 of the Companies Act of 1956, the primary duty or the objective of an auditor is to report to the owners whether the balance sheet gives a true and fair view of the company's state of affairs and profit and loss account is given the current figure for the profit and loss for the financial. So main or the basic objectives as per the Companies Act of 227. So they are telling that as an auditor should report to the owners that the balance sheet and P&L account they are providing the true or fair information. Then secondary objectives. So it is also called as an incidental objective. That means that is not a main objective, but by incidentally they are making an objective. That is what first one will be detection and prevention of fraud. Second one, detection and prevention of errors. So detection is nothing but we are going to find out. So prevention means you take a necessary step to prevent that activity. So detection of material frauds and errors as an incidental objectives of independent financial auditing flows from the main objectives of determining whether not the financial statement give a true and fair view. So if you want to fulfill the primary objectives, that is the company has a true and fair view, so you have to identify whether the company has an errors or the fraud. So if they identified, if they correct, if they prevent, then only they can obtain the true and fair view. That is why, so this will be called as an incidental or the secondary objective. So if you want to fulfill the primary objectives, the auditor has to fulfill the secondary objectives. Then so overall objectives are aimed that the detect the errors and fraud. So we know that frauds are there intentionally, they make an omission, that though they make an this transaction is not happened, they shows that the profit the entire period we have the profit only 10 lakh rupees. Likewise the misappropriation, by intentionally the books of accounts they make in a fraudulent activities. Then the errors means by confusion, by mistake they make in a mistake, that will be called as errors. Then overall objectives of auditors are aimed at to detect the errors and frauds in accounts, to prevent the commission of errors and the frauds, to enable the timely financialization of accounts, to make know the public that the state of affairs of the institutions are to achieve the objectives with respect to the government audit. Then there is a provision of the funds for the expenditure duly authorized by the competent authority. The expenditure is in accordance with the sanction properly accorded and incurred. The payment has been made to proper person and duly acknowledged so that the second claim on the same account is impossible. Then, in case of an audit or the receipts, the sum is due regularly recovered and checked against the demand. Then sum of received are duly brought and credit in the accounts. In case of audit of a store and stock where the price of accounts is maintained in the store, the price with a reasonable accuracy and the rates are fixed are reviewed. Then that the numerical balance of the stock of materials is reconciled with the total value of the balancing accounts. The expenditure confirm the following general principles of standard of financial properties. Then expenditure is not prime facie for more than occasion demand, and that every government servant exercise the willingness in respect to the expenditure as in the own money. Then no authority exercise its overpower of sanctioning expenditures to pause the order, which will directly or indirectly as its own advantages. Next, public money are not utilized for the benefit of particular person or the section of the community unless, so if the company has the receive the public money, but they have to use for the particular purpose, those purpose are the amount of expenditure involved the significant. So I obtain the money from the X person for this purpose, I'm using for this purpose, they have to specifically mention there in the books of account. Then the expenditure are in the pursuance of a recognized policy and the custom. The expenditure should be recognized as a policy and the custom which are following in the general accepted accounting principles. Then the amounts of allowances such as traveling allowances are not on the whole of the source of profit of the receipt. Next will be detection of frauds and errors. The term fraud means that is willful misrepresentation made with the intention of deceiving others. So their main intention is to cheat others. They intentionally misappropriate their transaction. That will be called as a fraud. Then it is deliberately mistake committed in the accounts with the you to get the personal gain. So the company want to gain a personal gain means they have to make a profit. They misappropriate their books of financial accounts. The frauds have the two things, that may be deflation of involving misappropriation of either the cash or the goods. That means they make a misappropriation of the goods again the cash. Then fraudulent manipulation of accounts not involving deflation. So the fraud will have the two types, that is fraud through a deflation and the manipulation of accounts. So under the fraud through, we again have the misappropriation of cash and the misappropriation goods and manipulation of accounts. So over the statement of profit and under the statement of profit. So fraud through the deflations. So following are the method of deflation involving misappropriation of cash or goods. So by misappropriating the receipt by not recording the same in the cash book, that means they receive the cash but they are not recording the same. If they receive the 10,000, they recorded it, they only receive the 5,000. Then by destroying the carbon copy or the counter file of the receipt and misappropriating the cash receipt, that means they intentionally they make a changes or they misappropriate the receipts. So they receive the 10,000 vouchers, they misappropriate, that means they are misappropriating that. Then by entering the lesser amount on the counter file and misappropriating the difference between the money actually received and the amount entered in the counter file of the receiver, that means they're misappropriate, that the cash is received and the cash will be entered in the books of accounts. Then by not recording the receipt of sale of a casual nature, for example sale of scraps, sale of old newspaper, so they're not given account for those things. So old newspaper I sale, they earn the 1,000 rupees, they're not recorded in the books of accounts. Then by omitting the record of cash donation received by the non-profit making charitable institution, if the company received the donation from the any NGOs, they are not recorded because that amount they can use for the personal gain. Then by misappropriating the cash received on a discount of bills receivables and showing them in a bills outstanding on hand. So that means they're making a bill discounting, but they're showing us the bill is not yet discounted, they're still outstanding. So these are all the fraudulent activities they are making in a while preparing the books of account. Next, by misappropriating cash received from the debtors and counseling the same by giving the artificial credit to the debtors in the form of bad debts. That means they are selling, most of the business are conducting the credit sales. They given the term credit period for the customer. That means they can pay after the 2 months or the 3 months. So then also if they receive the money from that particular customer, they are also treated as a bad debt. That means they are not yet received. Then, by adopting the method of teaming and lapping and process, under this method, the cash received from one debtors will be misappropriated deficiency in the other debtor. That means I received a money from A person, I am not received from the B person. That means they are misappropriate for making a gain. Then, by suppressing the cash sales by not recording them and by treating them as a cash sales as a credit, they make a that they make an 100% cash sales, but they make that so they make only 20% cash sales. The remaining 80% will be on a credit sale. They showing that in the books of account. Then misappropriating the sale of proceeds, that is work in progress sales, or the sale of goods on approval by basis by treating the transaction as goods received and not approved. That means the goods have already delivered but the amount has not yet received. Then by under the casting receipt and side total of the cash book by recording the fictitious and the bogus payments. So there is simply I paid this amount to some person, I purchased this machinery, I donate this NGO. They're making a bogus payment. That means they are not showing a true and fair view. Then by showing the same payment twice. So for the particular month, they are showing the I purchased the same machinery again. I invested this amount for the particular machine. Then by not recording the discount and allowances given by the creditors and the misappropriating the amount. So if you're purchasing a raw material from the supplier, they given a discount rate. For if there is an 100 rupees, they can give the raw material for 80 rupees. The remaining 20 rupees will be yours saved, but you are not recording in your financial statement. So if you're not recording, that means you are not want to show that you are making enough profit. So if you show the profit, you have to pay more taxes. For that reasons, they make that. So I'm not getting any discount from the purchase of materials. Then recording the fictitious and inflated purchase and misappropriating the amount. That means if they make a purchase, they misappropriate amount. If they purchase for the 10,000, they make it as I purchase for the 20,000. Then by overcasting the total wages sheet and drawing the amount for the misappropriation. That means costing total wages, they paid only some amount. 10,000, they make that they pay the wages of 20,000 for the particular period of time. That means they are misappropriating. So these are all the fraudulent activities can be conducted by the accountants to not providing the true and fair view for the books of accounts. Then fraud through the manipulation of accounts. It implies a presentation of accounts more favorably than what they actually are. That means actually they're not earning a profit, they are not in a good financial position, but they are showing that they are in a good position. That is what window dressing. We know that the scam of Satya company, they are Satyam company, they are making a window dressing. That means they are not recording the true and fair view transaction of their company. Then the auditors can suspect the fraud under the following circumstances. How then auditor can be identify the frauds? Then first step will be when the vouchers, invoice, checks, contacts are missing. So when the verification of the books of accounts, if the particular vouchers or the particular documents are missing, that means they make an fraud activities. So if they maintain every vouchers, that means so they have the true and fair view. And that aspect, the auditor can be identify that. Then when the account does not agree with the subsidiary books, that means if the journal entries are showing some amount and the subsidiary book, that is a cash book, is not showing the transaction, that means they make an a fraudulent activities. There isn't something error in that. Then when the difference in the trial balance is difficult to locate. So when the difference is in a trial balance, that means the debit and the credit is not balancing in a trial balance, the auditor can easily identify that there's something is happening in these books of accounts. Then when there is a difference between a balance and the confirmation the balance by the parties. So if you know that in the balance you are telling that for the A person I have to pay the 10,000, in the other side the A person is giving I have to pay the 5,000, there is no balance between them. On that time the auditor can easily identify that this company is making any fraudulent activities. Then when the explanation given by the client is not satisfactory for the particular transaction, while an auditor asks the bookkeeper, so how this transaction is happened, how they are making this transaction, if the information you obtain from that particular person is not satisfactory, then the auditor will be easily identify that they make a fraudulent activity. Then when there is an overwriting of some figures, so if they are showing overwriting, so as an auditor you will know that so for the particular transaction this amount may be happened. So if simply when a bookkeeper overwriting the transaction, that means they earn the irrespective of profit like that, so we are making a goodwill of this amount, so you purchase the material for only this amount, so that means they are overwriting, so they are not showing the actual figures. On that time the auditor can easily identify the transaction. Next one, when there is a contradiction of the explanation given by the different parties, that means while verifying the books of accounts, the each department will be verification by the auditors, so each workers or the each department giving a different opinion, that means they are making a fraudulent activity. Then procedures to be followed to detect the errors. So what are the auditors should be followed to detect the errors? First one, checking the opening balance from the balance sheet for the last year. For the last year, they have to check what is the opening balance for that. So then only they can make a, so this company has the closing balance of this amount. Then they have to check the posting into a respective ledger account, whether all the transaction is posted to the ledger accounts. Then check the total of subsidiary books. So they have to know, so there will be in a 10 transaction, they have maintained the, whether 20 subsidiary books they have maintained. Then verify all the casting and the carry forwards. Ensure that the list of debtors and the creditors tally with the ledger accounts. They have to know that the debtors and the ledgers are being equally matched. Then make sure that all the accounts from the ledgers are taken into accounts. So they have to know that the some transactions are having an entry in the ledgers but not in a subsidiary book. As an auditor, you should verify that all the transactions which are showing in the ledger same should be posting to the subsidiary books. Then verify the total trial balance. So what is the total amount of the balance figure of the total trial balance? Then compare the various items from the trial balance with that of previous year. So they have to compare. So the previous year financial items or the trial balance transaction which are taken for the current period or not. Then find out the amount differences and see whether the item of such amount is entered wrongly. So they have to check whether the amount is entering the subsidiary book or the journal entries are the same. Then checking the difference involving the fund figures. For example, they make for the 1,000 rupees transaction, they enter the 100 rupees. They have to check the vouchers with that. Then the auditor should perform the following duties in respect to the fraud. If an auditor's while verification, he find out the fraudulent activities, what is the procedure he has to follow? The first one, examine all the aspects of the finance. He has to examine what are all the aspects of the finance. Then watch the all the receipts from the counter files. From the counter files, he has to examine the books of accounts. Then check thoroughly the salary and wages register, whether the salary wages are the paid for the particular person for the particular amount. Then verify the methods of valuation of stock. So what methods of valuation they have making, whether they follow the LIFO method or the FIFO method. So which method they have followed, whether they make an ABC analysis, they have to verify that. Then check up the stock register, goods inward notes, good outward notes, and books and delivery of channels, and circulate the various ratios in order to detect the fraudulent manipulation of accounts. Then go through detailed unusual items and probe into the details of the problems when there is a suspicion. Then move on to the what are the advantages and the limitations of auditing. So as an auditing advantages, the first advantages will be audited accounts are readily accepted by the government authorities like tax authorities and central banks. If the your company books of accounts has been audited, that means verified by an auditor, that easily accepted by the government, that is tax purpose, that is easily accepted by the government. Then by auditing, the account errors and frauds can be detected and rectified in time. So when they make an auditing, the company will make out they will find out their frauds, they can easily correct those frauds and the misappropriation on time. Then audited accounts carry greater authority than the accounts can be deducted. Then for assessing the finance from the financial institution like banks, previous year audited accounts are be evaluated for determining the repayment capability. So if you want a loan from the bank, so the bank can obtain the audited reports. So on those audited reports, the bank can decide whether we can lend the loan for that particular person or not. Then regular audit of accounts create a fear among the employees in the accounts department and exercise the greater moral influence on the client's staff, thereby restating them from the commit the frauds and errors. So if the company conducting an audit, the employees who are working in the company, they're very conscious that if you are making a misappropriation, the auditor will be identified. So they can identify the frauds. That's why the workers or the employees will work more efficiently. Then next one, the audited accounts facilitate the settlement of claims and the retirement and debt of the partner. So if an audit works has been done, that will be given accounts. Who are the persons who are retired from our organization? How many persons who have been dead while working? So what are the benefits we are given for that person? Next one, in the event of loss of property by a fire or happening of an event insured against, the audited accounts helps early settlement of claims from the insurance company. If our books of accounts is audited properly, we know the certain assets which are in our books of company that can be easily verified. If your property is damaged, so when you go for the claims from the insurance company, if you give an audited report, they can easily accept the report and give your claims. Then, in case of public company where the ownership is separated from the management, auditing of account reassures the shareholder that accounts have been properly maintained. So, as a shareholders, they want to know the what is the financial position of the company. So that is why if the audited books of accounts give the true fair view, if the auditor is verify the way all the books of accounts, the investor will be have the more confidence that this company has not make any fraudulent activities. Then to determine the value of a business in the event of purchase or the sale of the business, audit account will be treated as the base for the evaluation. So while you are evaluating or you are calculating the depreciation, you are making an assets. So if an audited account is there, we can easily make that calculation. Then the audit of accounts by qualified auditor also helps the management to understand the financial position of the business and also helps the management to take a decision on the various matters like report to the internal control system of the organization. For an organization, through an audited statement, the company will know what are the strengths and weaknesses. As per the auditor report, the company management can take a necessary decisions regarding that. Then, in the event of admission of a new partner, audited accounts will be facilitate the formation in terms of the condition of joining a new partner last 3 years, and audited accounts give the general idea about the growth and the financial position of the business to the new partner. So, if you want to admit a new partner for a company, if audited information give the particular information for that partner, that means what is the current financial position, what is the previous financial position of a company. On that data, as a person who want to willing to partner to your company can decide whether I can partner to be a company or not. Then limitations of auditing. So the payment of audit fees brings an extra cost burden to the organization. So while books of accounts, they are taking a lakhs together for the verification, that will be an expenses for the company. During an audit, the auditor requires attention of several company staff and thereof the cause the disruption. So while verification, all the workers and the particular department persons should be there, because from the hearing that persons only the auditor will make a verification. So on that time, the regular work will be disturbed. Then an audit does not assure the future viability of the organization auditor. On the basis of auditor report, we cannot guess the future what will be our company. Then an audit does not assure the effectiveness and efficiency of the management. By an auditing work, we know the true and fair view. On that basis, we cannot estimate whether the company is working more efficiently or not. Then auditor express the opinion on therefore does not give the total assurance to the true and fair presentation of annual reports. So they not give a assurance that okay, annual reports have given the financial position will be true and fair. So finally, we can sum up the first module that, so auditing will be taken that basically they're going to examine the books of account by an independent person whether the company are making a true and fair. That means all the transaction and the events which are recorded in the financial statement and in the balance sheet they are showing the true and fair view. Then if there is any fraudulent activities is taken or the errors has been taken, what are the activities or the what are the procedures should be followed by the company. So these are we learn from the first unit. Shall we move to the second module or the second unit, that classification of audit. Let's move on to the what are all the kinds of audits. What are the audits will be there. So the company has the different kinds of audit. They are the namely periodical audit, interim audit, internal audit, external audit, computerized audit, continuous audit, final audit. So these are all the types of audit. So on the company preparation or the company needs, they can choose any number of other any classification of audit. So an audit essentially is a review function. As we know, it is in a review function. That means overall transaction will be reviewed. That means they are recheck the books of accounts. So the audit is conducted by the professionally competent person. That means the audit should be conducted by the chartered accountant. Then who is an independent of the enterprises. That means they're not involved to the organization. He should be an independent from the organization. Is concerned with the reviewing whether the business events have been measured and communicated to the financial statement in accordingly with the general accepted accounting principle. That means that independent persons will be review that the information will be communicated as per the gap. That means generally accepted accounting principles, then as per the legal requirements. So while you are communicating the business transaction to the interested party, that means the stakeholders, that has to become the circumstances with the legal procedures. Then in addition to the audit of an independent external agency, an enterprise may also employ especially qualified person to carry out the internal audit. So we know that the basically the audit should be conducted by the external person. That means it should be an independent. If the company want to know the regular progress in our their company, they can appoint the independent auditor person. That means for the particular person they can appoint the qualified chartered accountant as an internal audit for the that company. Then an audit is an examination may be performed in many ways depending upon the needs and the convenience of the enterprises. As per the convenience of the enterprise, they can choose the any classification of audit. Then move on to the first kind of audit, that is periodical audit. The word itself telling periodic, that means on the period basis they will going to audit the books of accounts. So yearly we are going to prepare the financial statement at the end of the year. That means 31st March we are going to prepare the financial statement. After the books of accounts will be finalized on the particular year or the particular financial year, on that time the audit activities will be taken. That will be called as a periodical audit. Next one will be the what are the objectives of periodical audit. They can move on to know whether the organization is maintaining the regularity at the time of maintaining the books of account. That means at the end of the period whether they are maintaining the books of accounts will be get to know. Then to know that the profit and loss presented by the business is true and fair. So whether for the particular financial year whether the P&L account is showing the correct profit or the losses for the particular period. Then to know that financial position presented by the balance sheet is true and fair. Then in the balance sheet the financial position, that means the assets and liabilities and the capital and the equity are showing the true and fair view. Next, advantages of periodical audit. So first one, less expensive. So that means we are conducting on yearly basis. That the end of the year will be making an audit. That means the auditor will come to the at the end of financial year and he will check the books of account. That involves the less expensive. Then no disturbance in the work of client. So if you are coming at the end of the period, you are not coming for the interdependent interim period. That's why at the end of the period there is no disturbance for the regular activity. Then less chance to alter the figures. So at the time of verification, they not have a chance to alter. So if their interim audit if they are conducting an interim audit, they know that. So for the 6 month, they are making some mistake. They can alter the figures. So if you are conducting the periodical audit, the auditor will be come to at the last. That means at the financial period, at the ending of the financial period. So you will know the mistake or the fraud at the time of the end of the period. So that is why in the alter they do not have any chances to alter their figures. So these are all the advantages for an who are conducting a periodical audit. Then move on to the disadvantages of periodical audit. First one will be the unsuitable. So big organization has a large number of transactions. So audit of such organization require more time. This periodical audit unsuitable for the big organization. If a big organization, we are running a large scale organization, means we have a number of transactions. For the a number of transactions for the particular day, we cannot verify all the transactions. That is why it is not suitable for the big organization. Next one, possibility of leaving errors. So detailed checking of books of account is not possible under this method because we are conducting auditing checking at the end of the period that is at a one time only. So we cannot go for the detailed error checking. That is not possible in the periodical audit. Next one, difficult to detect the planned fraud. So generally the frauds are committed in the direction to the top level management. So such a frauds are committed in a planned way. So frauds may be while conducting that should be in a planned way. So if you're verifying at the end of the period, we cannot identify the fraud easily. Next one, impossible to prepare the financial account in time. So if you have a periodical account, so for that, for the in time, that means for the 31st March, we cannot make a full preparation of financial accounts. Then reorder of quantities are not optimum level for correct the calculate eco. So for the by calculating your economic order quantity, that is not possible if you are conducting a periodical audit. Then less responsive changes in a consumptions. Then less responsive changes in consumption. If the rate of usage changes shortly after the review, the stock out may be well occur before the next review. That means after the verification, if the stock is showing that a price is verification variation in the market, so we cannot update it because we are conducting at the end of the day. They have to wait till the next verification. That is a limitation of periodical audit. Next one, interim audit. The word is telling that interim, that means in between the period they are conducting the audit. An audit is conducted between the two annual audit. That means for the 6 months while they are making an auditing work. The profit enables the company to declare the interim dividend known as interim dividend. Why they are conducting an interim financial report means for some company are paying a dividend on an interim basis. That means 6 months they are providing the dividend. For that they have to know the verification of books of account. On that time they are conducting a audit. The audit or the books of verification conducted between the two annual report. That means for the 6 months we called as an interim audit. So what are the objectives of interim audit? Why we are conducting interim audit? To know the profit and loss for the interim period. For the particular 6 months, what is the profit and what is the loss? Then to distribute the interim dividend. Main objectives of interim report to distribute interim dividend. That means dividend which had occurred for the first 6 months. Then to get a loan on the basis of interim account. So while you are running a business for the particular 6 months, we need some amount of loan. So while you are approaching the bank for the loan, you have to provide the audited report for that particular 6 months to get the information about the financial position for the entrepreneur. If the management have to make a policies or the procedures or make a plan or the strategies, you need a particular information for that particular 6 months. On that time, they will going to make an interim audit. Then move on to the what are all the advantages of interim audit. First one, publication of interim figures. So first advantage is we can make an interim publication figures. That is in some cases publication of interim figures is compulsory. So in such cases interim audit is very useful. Some business has to give the information, mean they have to publish the regularly. So what is happening in the business? So for those company, the interim audit will be useful. Then easy detection of frauds. So if we are auditing in a 6 month basis, so we can easily identify because the transaction for the 6 months will be less than compared to the yearly wise transaction. So we can easily make and identify the errors which are happening in our transaction. Then check on the staff. So when the staff or the clients know that any time during the year the accounts are checked for the interim period, they can will be not commit any fraud. That means so if the workers know that the company will be conducting the audit report for on the in between the period of a financial year, they can very conscious. They're preparing the financial statement. They not take any step to make a fraudulent transaction. Next one, completion of the final audit. So if the interim audit is countered, then the financial audit can be completed very soon and easily. So if it is 6 months audit is already completed, so it is easily we can complete another 6 month audit very soon. Then suggestion and implementation. In case interim audit, the auditor's suggestion can be quickly implemented. So if an interim audit, the auditor will be suggested that say if property is not good, you are not making these principles, you are not adopted, that can be easily can be corrected for the next 6 months. Then satisfactory work. So staff of the client may work with a proper attention satisfactory along with the advice of the auditor. So as an auditor gives the guidelines for the particular period. So the staff will be work more efficiently than the periodical report. Then convenient. Interim audit is very convenient for the management because they invite the audit staff when their business's activity are slow. So when the audit is slow, they can convey the workers and they give the guidelines for them. Then interim dividend. So the management can easily prepare the accounts for the proposed interim dividend. Interim audit is very useful to declare the dividend. If the books of transaction is verified for the 6 month, the company can easily declare the dividend for that means proposed dividend for the next month we are paying this much of dividend they can easily encounter. Then moral check. So all the work done by any staff members of a company is checked by the auditors in an interim audit is provides all the moral check. That means they are continuously checking the books of accounts for the 6 months or the particular period. They ensure the moral in the minds of the employees. Then case of new partner. So in a business, when the new partner enters, interim audit determines the current position of the assets and the liabilities. So in between the 6 months, you have to appointing a person as a partner, they can know the true fair view for that particular period. Then death case. When any partner dies, then the interim audit is very helpful in determining the position of the assets and the liability. So in the interim report, if the 6 months, if the any partner has death, so we can know the financial position, what are the discharge of obligation related to the partner. Then retirement case, if any partner wants to leave or retire from the business, then the interim audit can be easily determine the correct position of assets and liabilities. So if the while retiring a persons we are paying some amount, so on that what are the verification or the changes will be happening in the financial statement we can be easily identified. Then price fixing. Goods and services prices are fixed by the management and costs are calculated by adding the profit. The selling price is fixed and for this purpose the interim audit is desirable. So if is an interim audit shows that so we are incurring a losses for the particular reason, so they can help the management to fix the higher prices or to attract the incur the more expenses on the advertising activity to increase the sales. Then encourage the investment. So due to interim audit, investor rely more on the company's performance. They purchase or sell the shares keeping the view of audit report. If the 6 month the audited report shows that the company is working well, then the investor want to again purchase our company shares and all. They have the good opinion regarding the company. Then what are all the disadvantages of interim report? And the first one will be disturbance. So regular accounting work of an interim audit disturb the office work of the client. So in a periodical audit, they will come after the end of the financial period. But in a interim report they regularly come and check the books of account that will be disturb our regular work. Then burden of work, so it increases the burden in the minds of worker because they have to keep in mind that the audit will come and work audited the books of accounts. I have to do very confidently, I have to make all the transactions should be optimum accuracy. So these are all the burden of work. Then changing in a figures. So a dishonest official may change the figures of accounts which already audited by the auditor. So there is also chance of fraud in such a type of audit. So if a 6 months audit has been done, that means again the auditor will not come and verify those books of accounts. So on that time, the company can make a fraudulent activity. They make a changes in the figures of account. Then more expensive. So this type of audit will increase the expenses of the business because it's not compulsory by law. So it is not compulsory by law, but the company want to know their financial position on a regular basis. That is why they have a 2 times auditing. That means they have to pay more extra money for an auditor. That will be increases the expenses for the company. Then not useful for the third party. So that is interim report that will be not useful for the third party. It is mainly used for the company for making a strategic decisions. So next type of audit will be internal audit. So word itself telling that internal audit, that means they are conducting an audit or the books of verification for the internal purpose only, for the business purpose of our company purpose only we are making a books of accounts. So as we are aware of the internal audit as a review operation, a record undertaken within the business specially assigned by the staff. So it is a past interaction review to evaluate the correctness of the records of effectiveness and the operation of the continuous basis. So you have to know how the company is working. So how effectively the company are working. For that purpose, we are making a internal audit. So what are all the objectives of internal audit? First one, to verify the correctness, accuracy, and authenticity of the financial accounting and statistical record presented to the management. While presenting the details regarding the financial transaction, they make an internal. They first verify the transaction and then give the information to the management to make a decision. Next objective will be to confirm that liabilities have been incurred by the organization in respect of its valid and legitimate activities. So if I'm conducting an internal audit, they can know the what are the obligations of the company. Then to commit the effectiveness of an internal control system and internal check system in the force, and to suggest a way and the means to improve this system. Then to facilitate the early detection of prevention of frauds, to examine the protection afforded by the company assets and use of them for the business purpose, to identify the authorities responsible for purchasing assets and their items as well as the disposable of assets, to ensure that the standard accounting practices which have been followed by the organization are strictly followed, whether they're following all the procedure or not as per the Indian Accounting Standard Board, whether they are following IFRS, whether they adopted the gap, they have to checking for the internal purpose. Those audit will be called as an internal audit. So let's move on to the what are all the advantages of internal audit. If the internal audit conducted by the company, what advantages will be have by the company? First one, the biggest advantages of internal audit is that it will lead to discover the errors, and therefore when the external audit is done, those errors which may be discovered during the internal audit. So if you are conducting an internal audit, what are the errors will be encountered, while before going for the final audit they can correct those errors. Second one, since internal audit is done by the employees of the company, there is no additional cost involved, by which again big advantages for the company which is doing an internal audit. So if the company making an internal audit, that has to be done by the internal audit employees only, they not incur any additional cost for the company. Next one, an internal audit is a constant procedure where the records are checked regularly to ensure that accounting staff of the company keep the records up to date. So if you are conducting internal check or the internal audit, so that company will know that so all the transactions are recorded in the financial statements or not. Then staff remain alert because their work shall be checked by the internal audit, so the accounting remains correct. So that means every transaction will be checked regularly. So if the transaction 10 transaction happening per day, those transactions will be checked immediately. The workers will be very conscious to recording all the transaction with correct manner. Then internal audit helps to detect the errors and the frauds and provide the suggestion to improve them, which helps the management take the corrective decision. So internal audit gives the information related to the all the financial transactions which are happening on the particular date. Using that information, the management can take a effective decisions. Next one, the internal audit detects and misuses the resources in time, which helps to reduce the unnecessary expenses. So while checking an internal purpose of verification, their company will know that what are all the wastage activities are happening in the company, so they will take a necessary action to prevent those unnecessary expenses. Next one, internal audit check the efficiency of a staff, which helps to increase the efficiency of them. So next one, internal audit checks the books of accounts, detect the errors, fraud in helping the correction of which make the act of final audit easier. So if you have an internal check, that will be final audit work will be very easy. Next one, disadvantages of internal audit. So internal audit reports is not accepted by either by the shareholders or the tax authority. So it is external auditor reports will be required to be submitted to the these party. So internal audit reported should be mainly used for the internal purpose, should not be accepted by any government or any shareholders. Okay, for that they again have to make an external audit. Second disadvantages will be, since internal audit is done by the employee of the company, chances are that it may be biased, therefore the company cannot be dependent on such a report. So it is basically conducted by the employees, is not conducted by the any certified chartered accountants. They make, using this information, they make cannot make an efficient decisions. Then since an internal audit is not done by the professional auditor, chance of internal auditor is not detecting on errors are real. So errors may be very high because it's not done by the chartered accountant. So these are all the disadvantages of internal audit. Next one will be the external audit. So accounting system is a chain of activities in an entity by which the transaction or proceed by maintaining the financial record. So an assessment of ledger, journal, bank account, sales invoices, purchase orders, and expenses accounts. So auditor goes on to point out that the audit process seeking the information and assist from the organization workers. So also an auditing procedures that inspect the accounting observes constantly during the year. So instant audit are usually skill driven, intended to automate the error checking and data proof in real time. So an audit is essential because of a public listed company. It is important that audit is approved out of the guarantee of the companies are using the fair policies prescribed by the law and the public money is safe in hands. So external audit is basically overall they're telling that they're conducted by the external person because the public company are accepting the deposit from the public as in the form of shares. They obtain the capital from the public, so they make an account for that. So those funds were used for what purpose? So external audit will give the verification of all the books of accounts by an independent person. That person do not have any link with the company. So let's move on to the advantages of external audit. So as an virtual advantage of an audit is that make easier to compare the diverse companies as an auditor, articulate the judgment about the equality measures. The company is given the good judgment, then it means that it follows the law. Then it is also assist a positive value. In audit will remind the managers frustrating the pamper the deceptive performance and resource the responsibility. It comes from the dependability and the honesty of the consequences. So if the company make an external audit, they are very conscious. That means all the books of accounts will be verified by the external persons. So if they get the opinion from the external person that the books of accounts is not true and fair, then that opinion matters a lot for the company. The company images will be collapsed. That is why if the company making an external audit, the main advantages is that they make a good proper accounts. Second advantage is the external audit is essential if the internal auditor is unfaithful to the organization, then the external auditor can verify the accounts of the company to identify whether the company is a fair, true accounts. There are unfair and false accounts are there. So this grounds the company as the external for the company. If the company know that internal audit they are not giving the true and fair view, that time the external audit will help that the company can get the true and fair view of their financial position. Next, audit that owners will be connected about the business operation and working is various subdivisions. So if they are making the external audit, the subdivisions, because the company are operating in a multinational some branches, so we can get the all the data will be audited by the external person. The errors, whether the committed unknowingly or consciously, are exposed by the process of audit. It is an attempt to prevent their occurrence in the future. So, if it is an external audit they are conducting, they can easily, whether they make a mistake by intentionally or the unconsciously. That means by mistake they make a mistake that can be easily rectified by the external audit. Then, external audit is very practical in attaining the sovereign opinion of the auditor about the business condition. If the accounts are audited by the sovereign auditor, the reports of the auditor will be true and fair in all the respect to it will be tremendous for the management of the company. So if an external auditor without any prejudice, that means without any pre-opinion or a misconceptions or the any disappropriation, we will make an audit. So we will get the true and independent information will get regarding the company. Then disadvantages of external audit. So it can be expensive because the company has to pay the auditor, also preserving the comprehensive records for all the interaction with engaging the lot of expenses. So as an external audit we are concerned, we have to pay for it. Then external service providers do not offer a systematic internal recruiting grounds for the future senior managers. The insufficient consideration, organization may gravely obstruct the service provider helpfulness. The discretion might be violated if the external individuals have access the suspectable in the rank. Then next one will be the computerized audit. So as we all know, the government agencies have been introducing the computer in various operations in the recent years. So everywhere we are moving for the digitalization. Every accounts will be maintained in a computerized manner. So for this purpose, shifting the process of increasing the amount of operation as well as their adequate control, even if the very limited fields of directly related to the accounting matters alone, many computers have been used tax collection, financing operation, insurance operation, pension operation, inventory control, construction cost estimation, among the others. With the introduction of the computers, conventional accounting system had method using the papers of the pens abuse of undergone drastic changes. Therefore, exerting the great impact on the internal control and audit trials if the following audit is procedures. So that is the auditors can no longer depends upon the viable records but check the existence audit of internal control system which exceeds the accuracy of the operation. The number of records which can be read only when the processed by the computer increasing while intermediary by negligibly records the history. That means computer audit means is very basically simple that. So in a traditional manner verifying books of accounts by the physical manner. That means all the transaction will be going and verified with the company itself. Now all the transaction will be recorded in a computerized manner. So if the auditor want to access to the financial P&L account, balance sheet or the cash flow of the company, you can easily access to the computer software and can easily verify the transaction in the computer manner. So I'll end up this session now. So next session will be conducted tomorrow regarding the advantages and what are the procedure they have to make for the computer auditing. So thank you all.